Hi, welcome back to O Business Consultant. Today we are back with a new Excel model, that is Daycare Center Excel Financial Model Projection Template. In order to review this model, we are going to go through 8 different sheets. But before reviewing this model, please note that these P cells represent the input cells and the gray cells are representing the range cells. Starting off with the first sheet, assumptions. Here we have included all the major assumptions related to this business. Now these assumptions include the investment assumptions, loan, capital expenditure, operating expenses, payroll, as well as revenue and cost assumptions. In the inventory analysis sheet, we have calculated the opening inventory figures and closing inventory figures for this business, both in units and in dollars. You can see I have calculated the total inventory figure here. In the next sheet, revenue analysis, we have calculated the total revenue being generated from each revenue channel. Now, in this model, the revenue channels are infants, toddlers, preschoolers, 6-year-olds, and 8-year-olds. Ultimately, we have also calculated the total revenue figure for each month and for each year. This is the 5-year projection model, so the total number of months in this model is 60 and the total number of years is 5. Next, moving on to the cost of goods sold analysis. Here we have calculated the cost of goods sold figures for each year and for each month again. In the supporting details sheet, we have calculated the total major operating expenses of the business. Now these include the fixed operating expenses or variable operating expenses, payroll, depreciations, loan, and working capital assumptions. In the working capital analysis, we have calculated the accounts receivable, accounts payables, and inventory figures. Moving on to the next sheet, financial statements. Here we have included three major financial statements of the business. That is income statement, cash flow statement, and balance sheet. The income statement is basically presenting the financial performance of the business by through the figures of gross profit margin and net profit margin. In the cash flow statement, we have basically highlighted the three major cash flows of the business, that is cash flows arising from investing activities, operating activities, and financing activities. Then in the balance sheet, it shows the financial position of the business. Now it compares the total assets and the total liabilities of the business. In the startup summary, we have compared the expenses and the funding for the first year of the business. We have also included graphs for easy analysis. Then in the financial analysis, we have included the main analysis of the business, such as break-even analysis, your financial ratio analysis, break sensitivity analysis, and company valuation, where we have calculated the NPV, IRR, payback period of the company, as well as return on investment. Moving on to the last sheet, here we have included graphs to represent the major financials of the business that we have calculated in the previous sheets. Now these include cost of sales, total assets versus total liabilities, profitability in dollars, and profitability in ratios. We have also included a scorecard to highlight the major financials of the business. That's it from today. Thank you so much for your time.